Thanks for staying with us on SABC News. Asian stocks gained today as risk sentiment improved. This followed a strong rebound on US markets on Friday when oil price eased, which helped to temper fears around high inflation, with the US Federal Reserve's aggressive approach to reining inflation in and also helping to improve sentiment around the future trajectory of inflation. In Japan, the Nikkei up 1.4%, the Hang Seng gaining 2.3%, and the Shanghai Composite Index 0.9% firmer. Let's go to Wall Street now, which ended the week stronger, posting big gains. Investors believing that the market has been overly pessimistic. The S&P 500 sectors climbing 3% to end at 3,911.87 points, while the Nasdaq Composite gained 3.3% and the Dow Jones Industrial Average rose 2.7%. In other markets, European shares hit a two-week high today, boosted by miners, as an easing of COVID-19 restrictions in China lifted global commodities and assuaged inflation fears, while Prosus shares rallied on the Dutch company's plan to trim its 10-cent stake. Let's take a look at the rest of the markets. Michael Trahan from Vestec Asset Management joins me now. Thanks so much for your time on SABC News. Let's start with the US markets closing high on Friday. What was driving that?
Yeah, afternoon, Nzinga. First positive week for the US in 3 weeks, so it has been a nice trend last week. It seems that a lot of the green in the markets was driven by Fed Chair Jerome Powell not being as aggressive when he spoke about interest rates in front of Congress last week, abating some fears that the US would raise interest rates very aggressively and then push them into a very bad recession. He did note that he thinks that the US economy is strong enough to withhandle a few more interest rate hikes, but they will still be tempered. So market feeling a bit more calm and positive about those comments.
And the Asian markets following those US markets higher today. Talk to me about that.
Yeah, I think it's general positive sentiment coming through global stock markets. It's been a very, very rough 6 weeks. And I think it's just markets in general giving a relief rally off of the lows. Long may it last.
And of course, that would also apply to our JSE, which opened in the green this morning.
Yes, up over 2%, and as you mentioned, that's because of Naspers and Prosus, both stocks up over 20% this morning. So that's great news because most South Africans probably have exposure to Naspers or Prosus at some form.
Okay. Michael, we know the G7 meeting is taking place. Talk to me about how markets and investors are looking at that and what they may be hoping happens with commodities, especially when it comes to the price of oil.
Yeah, so one of the things that the G7 is trying to balance is how to cut off cash to the Russian state, but at the same time not drive inflation too much higher. Russia is a big exporter of gas and of oil, and if you remove Russia from the market, it leaves a very big hole. One of the suggestions that seems to be taking traction at the moment is to still buy Russian oil, but at a price cap. And some of the countries feel that this is a win-win because they're limiting the amount of money that Russia gets, but they're also limiting the impact of inflation and supply shocks on their own country. So we need to see how that ends up. But at the moment, oil price slightly higher this morning, but well off the highs of last week.
Michael, let's talk about company news. I know you've touched on it a little bit earlier on when we were talking about the JSE. Naspers and Prosus today announcing a long-term share repurchase program. Just explain what's happening there and how that's going to work.
Yes, so Naspers trades at a 60% discount to the underlying value of its assets. So effectively what that means is Tencent is their biggest asset by far. And the Naspers value on the JSE is 60% less than their stake in Naspers. So you see a very big value discrepancy between those. What management's doing now to try and narrow that gap is they're going to sell 10-cent shares, raise cash, and then go to the JSE and buy Naspers shares on the market. And what that does is it will narrow the gap. So management say that they're going to do this in a slow, controlled manner over time until they feel that the gap is small enough to be reasonable. So that's why we've seen Naspers pop 20% today, because this plan from management more than likely is going to reduce the 60% discount to probably around 30%.
Okay. And then a new listing on the JSE today. We don't see that too much. Have you looked at that and what's happening there?
Yes, new listing. I'm afraid they were already listed on the Cape Town Stock Exchange, so they're not new, but at least new to the JSE, and they got to blow the kudu horn this morning. But it's CA Sales Holdings, and they are a warehousing and distribution company for FMCG companies. So they've got some big suppliers like Diageo. They do the logistics around them locally. Not a massive company, only a market cap of about 2.2 billion and sales of 8 billion. But they're expecting fast growth, and the reason for moving from Cape Town Stock Exchange to Johannesburg Stock Exchange is for greater publicity and to be seen. And I suppose that's demonstrated by the fact that we're talking about them today.
Okay, and as we look to the week ahead, is there any other company news or anything that you think is going to move the market that's coming up in the week ahead?
Yeah, so week ahead, we've got the usual jobs data on Thursday from the US. Probably more important, there's inflation data from the EU and GDP data from the US and the UK. Particularly on the GDP data, investors will be looking very closely to see how these interest rate hikes have impacted economic growth and how close we are to seeing a global recession.
Michael Tran from Vestac Asset Management, thanks so much for your time and analysis on SABC News.